A new law that kind of is under the radar for a lot of business owners gives you the opportunity to do 100% first year bonus depreciation on a vehicle if it's used for business. Again, this is not designed to give you legal or financial advice. Make sure you get good advice from an accountant and how this might apply to you, because it doesn't apply to everybody. But the Tax Cuts and Jobs Act that was passed gives you unlimited 100% first year bonus depreciation for qualifying new and used assets, including vehicles. Meaning that if you purchase a vehicle that is used for business, you can deduct the whole amount of that vehicle in the first year. It used to be that you had to depreciate over a series of years, but this Tax Cuts and Jobs Act gives you the ability, in some cases, to deduct that vehicle over time. In some cases, it has to be a certain weighting. So qualify as a heavy vehicle, it must have a GVWR of over 6,000 pounds. It's not a huge amount. In fact, some suitable heavy vehicles include Buick Enclave, Chevy Tahoe, Ford Explorer is over 6,000 pounds. So make sure that you understand what it applies to and if it applies to your scenario. But if you purchase a vehicle and use it for business or will use it for business, there's an opportunity to take a look at whether or not you can deduct it for taxes. And this accounting firm, Gumbiner and Savitt, has a really good article about how it works. And if you have a situation where you have a business and you have a vehicle that fits the description, you may be able to investigate with your accounting firm whether or not you can depreciate the whole amount. Look, if you have a $50,000 vehicle and you're in a 20% tax bracket, which will be low, that's a $10,000 cash value of that deduction to your taxes in 1 year. You don't have to divide it up over multiple years. So take a look at it, see if your vehicle applies and whether or not your business tax scenario would benefit from this Jobs Act.